In this video, we'll talk about a simple but powerful trading strategy that can give you 20 pips on every entry. So it's basically following up with these steps whereby we are going to identify long sustained trend, reversal of that long sustained trend, find the point of market interest and book 20 pips on that particular trade. So sit back, relax and learn something new. Here's the trading strategy definition. The most crucial part of this strategy is to observe the long sustained trend. What are we referring to when we say long sustained run? It's basically when price actually makes a rally, and that particular rally is what we are referring to as the sustained run. Look for clusters whereby the market made trends on the M15. So the sustained run should be seen on the M15 time frame. You may need the 13 and 50 EMA to simplify the entry point. So basically these are the indicators that you can add on your charts: the 13 and 50 exponential moving average applied to close, and you can as well add these on your mobile or tablet, any of your trading devices. After a cluster of a sustained trend, always anticipate a reversal. So whenever you see a sustained run or sustained trend, upwards or downwards, always anticipate that the market is going to pull back or to reverse. Our point of market entry will be at pullback after a reversal as illustrated below. So here's the illustration of everything that we were trying to put across. We've said the first thing is actually to look for a sustained trend on the M15 time frame. Look for where the market made a rally in the upside or in the downside. After that, we are going to anticipate a reverse. A reverse is basically change of the market direction. If it was up, we are looking to see the market turn to the downside. After that reverse, we need to see an M15 13 EMA crossing the 50 EMA, right? 13 crossing the 50 EMA in this particular instance in a downward manner. Then point of market interest is when we see the market pull back to the 50 on the M15 time frame to give us a point of entry. So we call or refer this to point of market interest. We are interested in taking an entry when the market comes to this point. Then our target must be 20 pips, whilst our stop loss must be 10 to 15 pips on each and every entry. However, there are entry confirmations that are required when the market comes to the point of market interest. I'll illustrate that when we jump over to the charts. So let's now go over the charts for trade examples. But before we do so, check out our free Telegram channel where we share free signals. The link is right in the description box below. Alright, so this is CAD against CHF. You can apply this particular strategy on any instrument of your choice. Make sure you are trading something that is volume, because I've seen others actually trying to trade bonds with these technical methods. Avoid those ones. So the first thing is actually to find a long sustained trend. We can see the market actually came from this zone. It went down, right? A long sustained trend can last 2 or 3 days of drop. In this case, we had this particular drop. After that, we were anticipating to see a reverse, right? A reverse is basically a change of direction of the market. After that change of direction of the market, we need to see a crossover of the 13, which is in red, and a 50, which is in blue. After 1350 EMA cross, we can see the market went up. Crossover was issued here. The market went up. Therefore, our entry point will be retest of the 50 and closed above the 50, right? Retest of the 50 and close above the 13, sorry. Retest of the 50, close above the 13, which was at this candlestick that did that. Then our stop loss, we've said 10 to 15 pips. In this case, 10 pips was going to be hit it will be better to actually have 15 pips, which is something that will give more room to your trading. However, if you had a 10 pips stop loss, this week was going to take you out, right? Let's go forward. We could see that we had a sustained run to the upside. After that sustained run, we had a market reversal, then a candlestick, actually a 1350 EMA cross here. We were in need of a retest of the 50, not a piercing, right? So a retest of the 50 occurred at this point, whereby the market went, retested the 50 and closed below the 13, which is at this point, right? Let me zoom in. Closed below this point, right? So after closure, we could actually get our 20 pips with ease, right? From there, actually continue. We can see we had a proper reversal point from a long sustained run, but the market did not give us a retest of the 50 properly. Although this can be deemed a retest of the 50, it happened at the same cluster where the crossover was issued, right? In this case, there was no sustained run that lasted 2 to 3 days, right? Then from there, we can see now that we had a sustained run that lasted 2 to 3 days, and in that case, we were waiting to see a reversal. A 1350 cross was issued, retest of the 50, closure above the 13, and we could enter and get our 20 pips. So basically that is how you will be doing. From backtesting, I've actually discovered that you can run at an accuracy rate of 65 to 70%, and meaning we can leave 30% on the negative hypothesis of this particular strategy. So before you do this on a live account, make sure you're comfortable on a demo before you actually commit real funds. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and see you on the next one.